Taylor Mcnab from the Australian Mining Store. Taylor, my friend, how are you going this morning?
Very well, my friend Leon. How are you doing this morning?
Good. Bitcoin is a little bit in the green, but there has been some controversy with Gary Gensler, and I just watched that video and I'm really pumped at the moment. But let's go to crypto mining, my friend. So just a quick update. We've got some things to talk about today. What has really happened in the last month for crypto mining? Anything significant from your point of view?
Yeah, it's been a really positive time. And I guess that's commensurate to the rest of the market. You know, obviously, Bitcoin's price going up has helped a lot of people with a bit of relief, but also provided some really good profitability, which is really positive. You know what I mean? If you can have a really decent rate at the moment, it only sort of gives you a good projection going forward. So much like the rest of the market, it's been a very welcome start to 2023, that's for sure.
Yeah. So let's move on to our first topic, my friend. Thank you very much. We have a Bitcoin versus USD charts that we're going to bring up at the moment, and we're going to be actually looking at the Bitcoin halving, which is a major topic, got to do with the whole ecosystem of Bitcoin and crypto. So I'm sure you can see the screen here. What are we looking at, Taylor?
So this is something that I actually did just on TradingView, just to point out where we are in the cycle, which is really relevant to mining. So obviously you can see these yellow lines are actually the exact date of the prior halvings. Okay. Realistically, the next one is due to happen in 2024, which might seem a year or so away from now, is not actually that far away, being that realistically the hash rate is continuing to rise. It'll probably come forward to somewhere around Feb is what we're thinking. This paints a very clear picture if you can see the historical patterns that Bitcoin has somewhat played out with prior halvings. Okay, so usually we go through a lull of sort of anywhere from 180 to 250 days post halving. That has actually started to shrink considerably. If you can see on the second yellow line there, we went through a halving within, it was around 90 days, I believe, until the next cycle of epilogue, what they call it, of Bitcoin rallying. That is sort of what we're looking for in the next few months, right? Obviously, at the moment, if you look towards 2023, we've started to see that evolution. Realistically, I would say that means we're somewhere similar to where we were in sort of 2019 area, just prior to the halving. All right, we've peaked up a little bit. We're going to consolidate for a little bit more. That is a really positive picture as to where we're going.
Yep.
And usually that is because scarcity comes into the market, which I'm sure I don't necessarily have to go too far into what a halving means, but the halving is a very positive thing for mining. It is specifically designed for mining. A lot of people sort of fear it and go, oh, it's going to reduce how much I'm going to earn, et cetera, et cetera. Historically, yes, it does obviously reduce what you earn in the sense of BTC rewards, but in the sense of how you're able to capitalize from what Bitcoin you are mining, it's a hugely positive thing.
Right. Yeah. So I can see exactly what you mean here before the halving itself. Can you hear me, mate?
Yeah.
Yep. So immediately before the mining, like we have like a 1 year period or half a year period where it does seem like it starts having a small run up over here on the left hand side here, just in the July of 2021. And also a little bit before 2020, before the third halving. And so you can see this consolidation happening here. And so do you think that's what might be happening right now? We have a small peak, maybe some consolidation 1 year to the halving, which is 370 days away, give or take.
Yeah, very, very similar time period. I think realistically, our sort of understanding of where the market is we'll probably consolidate between the 30 to 40 range for a little bit. I think we will see a small pullback just into the halving, which is very common. Usually there's a bit of a sell-off as people go into the halving just to try and capitalize on what they've got with that volatility. Exactly right, as you're pointing out. And then obviously there'll be, a period after where scarcity really plays a massive part for miners, and that really is what dictates the price as to where Bitcoin goes. The biggest factor as to why we are very, very focused on the halving is because as everyone knows, the hash rate has continued to rise. That is only going to put more pressure on the halving and what price Bitcoin will see, because of the scarcity is going to be like something we haven't seen before. We're only going from, 6.25 BTC per block to 3.125, but we're going to see so many people with miners that are going to be struggling that there's going to be such a big capitulation event for miners, but also in the sense that people are going to push that reward so high.
Yeah, that's right. And I guess the difficulty will adjust because this is the beauty of Bitcoin, right? As miners keep struggling, electricity prices go up, they can't manage. And so they'll have to shut off their machines. Bitcoin difficulty goes down. And then the other people who are well positioned are able to capitalize on that. You said people don't really appreciate the halvenings so much in the mining community. So what's the sentiment? Like you say, it's good for miners, right? Can you elaborate a little bit more on that?
Yeah, exactly. So I guess a lot of people fear it, and those are generally those that are not positioned well. Okay. So, and I guess that really does depend on your positioning in the sense of your machinery type, if you're future planned. Usually the people that are the ones that are really fearing and struggling in the sense of where they're going to be with a halving event are those that usually bought and at a particular point in time and have not future proofed. They have not adjusted. They haven't pivoted. They haven't looked at, okay, I need to move with the way in which the market is going. I should be looking at getting a more efficient, a higher performing, et cetera, machine, rather than going, my machines from 3 years ago are still good. We're finding a lot of clients now are looking at what they should be doing for 2 years down the line. That's what's important, particularly because also it's going to give you an immediate relief, but it also give you a really positive outlook post-halving. So that's sort of where we see a lot of sentiment is coming from. We've had more clients in the past 2 months look to try and change their position, much like many of us, which is really positive because it's something that we can give a bit of advice on, being that we've done it, like I've done it myself. So it gives just that little bit of an outlook from a personal point of view as well.
Yeah. Yeah, that's good. That's very good insight. Thank you for that. I mean, it's not to say that this is going to happen, but, and history doesn't repeat, but it does rhyme, right? And that's what exactly what we're saying. You can see the small capitulation and then, you have a year after the halving and then, it starts running up. Not to say it'll happen. It could happen. No, but let's go back and see. I've got another chart here.
Knows,
we can't tell the future here, but we can only use the prior data we have and try and, model what we think might happen in the future.
Yeah, exactly right.
So we've got another picture here that I want to bring up. Yeah. So this is, we're going to be looking at Bitcoin price predictions from 2023 to 2030. But let's get some context for this, Taylor. Whose chart is this first, and what data are they using to kind of model this?
So this is pulled off Glassnode. It's something that we actually just created for clients. But the data itself was pulled from Glassnode in the sense of where that current trends are predicting. And obviously it's 100% a gamble, you know what I mean? But at the end of the day, the data in which it presents is extremely positive. And the reason that we're looking at this is purely because the data that it represents includes a certain few factors, one of them being halving events and scarcity models.
Yep.
The scarcity models look prior in the sense of what it looked like from 2009 onwards. So it puts in historical data and in the sense incentivizes where future models could go. So it's a really important tool in the sense of how you can try and see where the possibility of it being. And like I personally see this as a very useful chart, being that I think it's quite conservative. You speak to people and you say, where do you think Bitcoin's going to be in 5 years? And a lot of them are like, $1 million. You know what I mean? As much as like, yeah, that'd be amazing. I do think it's a little bit of a farcity. I think every time we go through a halving event, there's a smaller reaction. Yeah, exactly. I think the really thing that's really important to go with this is where we actually are now. I think that's a huge reason as to why I think this chart is a really good one, is because so far, in the sense of how we've reacted in 2023, it's been pretty good. There's been very little, idea as to how it hasn't performed. As soon as we went through 2023, the price did react quite positively, which would see a potential low of 23,000, which, to be fair, from historical data and the way in which the charts are presenting, that's relatively on site with what we're seeing, as well as, the data suggesting the average and potential highs. The reason that I find this chart really insightful towards mining is because you can actually, visually see it, but you can actually see and plan out a plan as to how you can potentially sell what Bitcoin you're mining, but also how you can plan to strategize based off what your reward price and the price of Bitcoin can be. I think mining is a little bit different to trading in the sense that when you mine, say, for 5 years and you've held onto it all and you've got half a Bitcoin or whatever it is, it's up to you when you sell that. You don't have to sell it the day you mine it. So having an understanding of what time frame and what price action could be like at any given time during that period, you can then sort of come up with a bit of a strategy on how you can position yourself and manage those funds.
Yeah, so I was just going to say it's a bit of forward thinking, and I totally agree with you. You don't have to sell everything you get at that moment. If you know that you have a good model in 2024, 2025, where price will be slightly higher, or a lot higher, maybe not to 1 million, then yeah, you can position yourself a little bit better. But I want to ask you personally, do you think at these dates we will be getting to these prices? 2030, the high is $350,000. Now, I'm a big Bitcoin proponent, but that is a hell of a lot of money for one Bitcoin. What do you think about that?
I definitely think it's in the realm of possibility. Do you know what I mean? I think historically, if you look at the data, 2019 or something, it was an $8,000 Bitcoin. So it's not out of the realm of possibility. It's just more or less about how long it could be there for.
Lost you. But Taylor, these kind of prices are, a little bit out there. I wanted to get your own personal opinion about it. So we have 2030 here. We have Bitcoin going up to $350,000. Now, I think that's a little bit out there. What do you think? Do you think, we can get there?
I think it's possible, but it's sort of how long it could be there for. We might just see an actual wick to that high, similar to what we saw in 2021 with BTC hitting 96 or whatever it was Australian. So there's a potential for it, but I wouldn't exactly be saying that would be the average price. No.
Yeah. It might be on a low liquidity thing. Yeah.
Yeah. I think the realm of idea of having an average price of, I think by that point, an average price of 150 to 200 USD would probably be where I would be expecting it to be. But that's still a dream in that sense too. Fingers crossed.
Yeah. Well, I mean, a lot of stuff can happen between now and then. We could have further banking crisis.
Exactly,
the Federal Reserve comes out, they keep rates at 10% or something like that, and people will be like, "Oh man." Yeah.
Well,
all right. So thanks for that, mate.
As well.
Yeah. I mean, it's not looking good for the next couple of years for us anyway. So that's my opinion anyway.
True.
So let's move on to some Bitcoin mining news, Taylor. So we've had some news coming out where we have Elizabeth Warren. I'm going to share my screen again so we can all see here. Now, Elizabeth Warren is a U.S. senator, pretty outspoken about crypto and mining. She is a Democrat. She's got some pretty, out there views about crypto. Let's see what she says on this tweet here. So Bitcoin mines are increasing energy bills for millions of American families while enriching crypto executives. And causing as much pollution as an additional 3.5 million gas-powered cars, an alarming New York Times report. So first off, do you kind of agree with what she's saying here? There are truths to everything that people do say, but of course, you got to take it with a grain of salt. Statistics are, when you put out statistics, you're not sure if they're actually true or not.
Yeah. Usually dirty fuel is expensive fuel for crypto. Because it's non-renewable, so you're consistently buying more. So I guess in the sense of where I think it's true, I don't. I think there's a very minute amount of the industry that's running off dirty power, is what we call it. A lot of it's got to be clean or some form of tax reduction. Otherwise,
some kind of renewable. Yeah.
Yeah, it's too hard. I'll put it into perspective. As a facility in the US that bought an old paper mill, they actually use I think it's called green coal. So it's a particular type of coal that comes out of machinery that's been used, and it's spread across America just on the ground. It's unusable for majority of industries. They actually harvest it and then burn it in a particular manner that's actually green, and it's completely free. So, do you know what I mean? That's sort of where the industry is
that's
going.
Good. That's
got to be cheap. It's eco-friendly.
That's what I like about Bitcoin mining as well. Yeah, you get to look at all these different alternative methods of providing power, whereas normally you wouldn't look at these sources of energy. So, and Michael Saylor did clap back on this, and he says Bitcoin miners decrease the energy bill for millions of American families and does not create pollution. There are data centers running on excess electricity that would otherwise be wasted, and they perform the vital role of powering the most secure computer network in the world. So Michael Saylor is coming back and saying, no, we don't actually use more electricity than is needed, because otherwise it goes to waste. Can you give us a bit of context on this? Because generally understand how it works, but a little bit more context on the use of excess electricity by crypto miners.
Yeah, of course. I guess I'll put it into perspective, right? There is currently a solar farm in Victoria, Australia that is dumping a megawatt a day of power because they actually can't get it on the grid, right? Like it's not possible with the way stations. That power can be better utilized in a number of ways, but at the same point, realistically, a lot of infrastructure that's put in around power is put in to monetize areas of need, which cryptocurrency is huge and mining is a huge part of that. But it also better utilizes infrastructure to help others in the sense of actually increasing energy grid capacity, increasing speed and reliability. There's actually a facility in the US that was built by a crypto mining company to better utilize the energy grid that they could afford to build. It actually produced a much better outturn for the community. I think it was within about 100 kilometers of that area, but they were able to mine and actually lowered people's bills by about 15 to 20%. So there's a huge amount of positivity with mining and particularly energy. I guess the people in government love to poo-poo on crypto and particularly mining because, it's seen as this dirty way of making money and then taking up all the energy, which is obviously a massive topic over the last 12 months. Energy's become, the number one commodity in the world. So any way they can try and discredit. Yeah, exactly. Yeah. So they're just trying to discredit and find a way to bring it down so that they can theoretically, try and win a little bit of power back, I reckon.
Yeah, I mean, a great example there where we have a company in, I forget where you say, sorry, a company that's having trouble getting the electricity to different parts of the country to try and sell. Instead, have a Bitcoin mining farm on there, and they can use all of this electricity and earn some Bitcoin. And then that's on the Bitcoin blockchain. You can send it with a low transaction fees, low power usage, and you can send that around the world. It's like transferring value across. So I just saw that and I thought, it's worth us talking about, especially because she's talking about this whole mining thing and how it's bad for people. And I've got to go ahead and read this entire report from the New York Times and see exactly what they say and compare that to what is actually happening in the real world. Now, I do have another article here because I know you guys recently did move from Texas to another part of the US because you have a mining facility there. So we have a Bitcoin mining bill in Texas that was actually just not released. I think it's got some time to go still. So this is about the limiting incentives for crypto miners. It's a bill that's going to pass in Texas very soon. It moves to the House committee. So just looking at the key highlights for this, it does say that under the proposed legislation, crypto mining firms participating in the program intended to compensate them for load reductions on Texas power grid would have their incentives actually capped at 10%. Certain companies would also not receive abatements on the bill starting in 2023. So from your point of view, from the Australian mining company or the Australian mining company that you guys have, what are you thinking about the bills that's currently being passed in the US, and maybe some insight into why you decided to move from Texas into another state?
I guess a little bit on this bill in particular. This one as well goes through, obviously, the compensation and incentives for companies to build out grid space with specific crypto mining in particular. But still important. I think it used to be about 40 or 50% anyway. So massive move for companies that are actually looking to build infrastructure. In the sense of what I guess the landscape in the US has presented for us, it comes down to a few different factors. Texas at the moment is very difficult to get a long-term power agreement, being the fact that a lot of the actual agreements that are guaranteed are very short-term, mainly because a lot of the energy itself is short-term. It's the way in which the power grid works there. If there is a certain load, like we saw it in December last year, when they went through, I think it was a 3 or 4 week period where they had severe weather of, freezing temperatures, minus 15. The power grid and then the governor said that all the power had to be utilized for heating. So all miners were shut off. Those were only on grid. So it didn't affect us because the way in which we operate is a lot of it is privatized. Otherwise, you are obviously at the will and beck and call to what anyone down the road says. But that's a huge concern in Texas. I think it was Core Scientific or something had 40,000 miners down for a month, which is massive for them. So
that is massive, like from a company's perspective.
100%. I think in the end, it went down to being, I think it was around 140 Bitcoin they lost because of that. So it's massive.
Wow.
In the sense of what it means for us, in the sense of how we operate, like we moved in the sense that we could get a better arrangement. In Kansas, we were able to get a facility that we're able to expand in. That's a huge thing for us. We're always looking to grow. Whereas Texas is very, I guess, commercialized in the sense that there's not a huge amount of ability to expand and scale with a partnership. You know, a lot of it's very dealing with a company. You know, you want to send more miners there. It's a bit short term, yeah. So we moved in the sense that it gave us a better ability to scale, build out, and offer better things to our clients. You know, the more you build, the more competitive you are, the more buying power, et cetera. It just gives you a whole different level to scale. So at the moment, you know, we've been set up in Kansas now for almost 2 months now. And, you know, we've got another hydro container going online at the end of this month. So we'll have about 4 containers there already with the idea to hopefully have 10 by the end of this year.
Very nice. And I got to touch base with you on those hydro containers. I really want to have a look at them. I want to see what it looks like and how it works on the ground level of things, because I'm very interested in it. Yeah.
Maybe we'll do a segment on. I can get the
yeah. So, and I guess
stuff over there.
Yeah, that would be actually pretty cool. I'm sure some of our audiences might be interested in seeing what a hydro container looks like for crypto mining. We'll look at wrapping it up, but before we wrap it up, I've got just one thing that maybe we can riff on a little bit about. So there was a recent, video that got released from a Senate hearing, I believe it was, where politicians were roasting Gary Gensler. Now, I'm going to go ahead and share this, and we'll watch maybe 1 minute or so of it, just to give some context on this, because it doesn't look good for Gary Gensler. He's not doing very well at the moment.
Thank you. Chair Gensler, I have a lot of questions in a limited amount of time. So if you could keep your answers to either a yes or a no, that will allow us to get through as many as possible, sir. From your perspective, is it more difficult now for the digital asset industry to access financial products and services in the United States than it was, say, 2 years ago? Sir,
and as you can see there, we're just going to stop it there very quickly. I'm going to leave the link in the description, but maybe we can discuss this for a second. So Gary Gensler is having some trouble answering some of those questions. And when he tries to answer these questions, the senator reclaims his time back. So it looks very kind of one-sided. He's being kind of attacked a little bit. Taylor, I wanted to get your opinion on this. You watched the entire thing. What did you think?
Yeah. Oh, it's hilarious. I love it. It's a very, very funny video in the sense of how someone, my personal opinion is that Gary Gensler is very untrustworthy. But at the same point, I actually love the idea that the senator's come straight out off the bat and has pointed the direction of this conversation from the get-go about, you haven't done your job. So it was, I love the question. I'll put it that way. What's your take on it?
I mean, my take on it is that, yes, he's in a very, very difficult position at the moment. He's trying. He has his view of what his job is, right? And other people have his view, or have their view of what his job is, and those two aren't meeting at the moment. So yes, there has been some issues with UST regulation by enforcement and crypto companies moving across from the United States to other places. So clearly people think that he's not doing his job well. I generally think he's in a very difficult situation, and whatever happens, people are going to go after him anyway. I do think he might be in some hot water here because, the spotlight is on him. So I don't know if he is going to be losing his job. I don't quite agree with what you say that he is untrustworthy. I just think he has been in a corner and he's trying to throw his punches the way he sees them, and they might not be landing in the correct places that he is. So yeah, maybe he's not, maybe he's just trying to do his job. And it's hard to say because you're not in his shoes, right?
It's
so
a hard job.
I got to go ahead and watch the entire Senate hearing. Yeah, it's a hard job. You have to please people and you have to increase interest rates to, curb inflation. But, as you increase interest rates, the whole banking system is going to fail. And of course, people are going to come after you for that. So how do you win out of that, right? You can't win. You have to keep going and try and decrease the inflation rate.
100%. I think, in more or less what this particular style of hearing is about is more or less about how I think he has failed to protect retail investors in the sense of investing in
the retail.
The regulatory framework in which people can invest in the US, particularly being that market is a lot more complicated,
liquid, capital intensive.
Yeah, exactly. Yeah. So the amount of protection that he's offered for others has been very limited. You know, and I struggle to think back 12 months ago as to what has changed, except for the fact there's less exchanges and less money for people to invest with because of natural evolution.
True. Yeah.
I'm not sure.
And you don't feel safer in crypto now with, I think so. Yeah. So I'm going to leave that link in the description for people to go and watch. It's, it's very insightful into the questions they're asking, and then it makes you think if he is doing his job properly or not. But as I say, he probably knows a lot more about his job than we do. So this is just outside commentary, and we just thought it was funny, so I wanted to share. But we'll end it there. I think, we'll end it there. Taylor, thank you very much for your time as always, mate. We'll keep you on track with crypto mining news and any latest that we think you should know. So Taylor, once again, where can people find you and where can they connect if they want to learn more about crypto mining?
Yeah, absolutely. So people can come through via our website. So you can either come through Imperial Wealth, which is our platform, as well as Mining Store Australia. So feel free to reach out. You can book a consultation to have a chat with myself or anyone else and sort of run through what options suit you if you are looking to get into mining. Obviously, you get the Leon discount as well, so just make sure you mention that. But just feel free to have a chat.
Yes, that's true.
Yeah, exactly. Yeah. We're more than happy just to have a chat and see if it suits you, and as well as go through what's the best sort of idea that's available at that time. So feel free to hit me up.
Sounds good. I'm going to leave up all the details, especially the 30-minute booking session to book Taylor, so you can have a chat to him in the description if you're interested. All right, we'll leave it there. Thank you very much again, Taylor. We will see you guys very soon in a month when we do our next update for crypto mining. So Taylor, once again,
Perfect.
See you later.